Ladies and gentlemen of the crypto space, we're live on a Friday, August 23rd at 11:30 a.m. Oh my, oh my. But we've been saying this for quite some time that the time was coming. The destination is unchanging. The path is always the conversation of what plays out between now and the destination. The destination is a significant increase in global liquidity in terms of available currency, as well as balance sheet capacity that's required to facilitate that currency coming into existence. And we have a trifecta of technical indicators that tell us that that time period, that situation, that scenario is coming. It's in the future. It's not like we are coming off of it. We are heading into it. Now, clearly, the DXY is one of the three indicators. But it's also a prime example of something that's extraordinary to understand. This is not a chart of the dollar. This is a chart of the flow of capital around the world, and we want to understand where capital is flowing from and where it's flowing to, and why capital flows from somewhere to somewhere. And that is constructive in understanding how to navigate markets. Remarkable relative FX depreciation of the dollar. And that is the only interpretation that is required, or that's the most important interpretation that is required. Relative FX depreciation of the dollar. This chart in no way indicates something structurally significant with regard to dollar collapse, and that is the most important narrative to completely ignore. It's an expression of not understanding the mechanics of financials, separate and apart from how perverted it is, but that's unrelated. What's pertinent is what I'm describing as the significance of this chart, the flow of dollars, because I'm pretty sure, as much as the doom and gloomers would love to argue, it's not going anywhere next year, the year after, and yes, things are changing. That's irrelevant. You got bills to pay. You got shit to do. So time horizon is critical. So over the next 1, 2, 3, 4, 6 years, heading into 2030, there's a variety of things to do that are not consistent with the dollar doesn't exist narrative. It's just an irrelevant narrative in understanding how to manage capital and navigate financial markets. Absolutely fascinating to see the dollar finally getting back towards 100. It's been a long time coming. We broke out of 100 back in 2022 in April. We are at basically the lowest point in the dollar since December of last year. We pushed down, obviously, in April of last year, February of last year, and we pushed lower in July of last year before we had a bounce in the dollar, significant bounce in the dollar, relative dollar value. But with rate cuts, and that's not the most important takeaway of where we're at, is what rate cuts signify. The Fed is responding to market conditions. The market conditions are therefore what to look at. And their response suggests they understand and are seeing the data that we look at that tell us, yeah, things are slowing down significantly. And it's complicated from a consumer price inflationary standpoint, but what's pertinent for the system to remain functional, an effective amount of currency needs to be in circulation. And for that to occur, the three technical indicators that we look at need to converge into confluence. Dollar down, move down, and long bond, which is 10 years plus, up, which is exactly what we're seeing, down to 3.8 on the daily. Well, it's down 3.8. It's down 1.19%. These lines mean nothing. But it's constructive and very similar to what else we see from a dollar perspective, from a bond market volatility perspective. It is a lower high back in April of 2024 in the 10-year, and is now punching for a lower low from a December 2023 and February 2024 wick to this particular level. But what's more constructive is this region. let me highlight my thought process and how I look at this data. So let's say this is a level, decent level. We make a fat line. So back in 2023, failed breakout in yields, failed low in bond price, 10-year bond price, failed, failure again, breakout. So the significance here is trend reversal. The significance here of going lower from here and eventually getting to, it's going to be fascinating. We find the low around 3.26%, which is the lows in April of 2023, which indicates strongly higher lows and higher highs, because obviously we have a much more structural low set back in 2020 when it was down at a half. But this would be cyclical invalidation of this breakout in yields above this line. Resistance, 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 support, lower high, failed support, support flipped resistance. And it'll be a cyclical invalidation if this technical directionality plays out. If this strengthens, if this line comes down, that means the price of collateral is increasing. As the price of collateral increases, you know very well what happens from an AVE health factor perspective. Very important to understand in terms that you can digest, terms that are respective of your experience and what your knowledge is of collateral and pricing. If your Ethereum is going up in price, you have a capacity to borrow more. Now apply that to the entire world, the entire professional economic world, and that's exactly what occurs. And that's why we see global M2 go up, up, and away. And that's not even necessarily the most important indicator. So long duration U.S. debt increasing in price, yields coming down, check. DXY coming down, check. And bond market volatility. It's the last one, but look, it's very similar as well. So you have your literally blow off top, one of the largest wicks in this index's or this volatility indicator's history. It's on the daily chart. We don't look at daily charts. We're not crazy like that. So we're coming off the largest spike in bond market volatility since 2008. And we are producing a directionality reversal indication, shooting star, lower high, lower high, lower low. And we're showing an expression of resistance from an average value standpoint. The TWAP as indicated by this chart in the green and red line, resistance there suppressing bond market volatility, or rather even just market participants are organically suppressing bond market volatility where demand is finally meeting supply. So there's very limited a ranged change in price on a daily basis, resulting in wicks. Now, these are quite incredible wicks to the upside. If this was our blow off top in volatility, this is a big wick. Crushed. Demand met supply. Same thing here. Interaction with the average value. Wick, demand met supply. Suppressed. What you want to see from at least a monthly standpoint is the 80 region. You start breaking below the 80 and push below these average values, the moving averages, the 200 and the 100 down here in purple and blue, and you're getting into a zone where it starts to get weird. We've said that term weird many times over the last couple of years. It's going to get weird. When? It gets weird when move crashes below 80. It gets weird when the DXY starts moving strongly below 100. And it gets weird when 10-year plus in government debt starts to appreciate, yields come down. That is the weird zone. So we'll obviously talk about the inverse of that particular scenario, the topping process as this market cycle continues. But we're finally getting to the point where the destination is probably within the horizon. It's probably like, all right, there it is. We've been moving toward it for years. Talking about a top in volatility in January of 23. So it's a year and a half that we're starting to see, all right, we're setting out on the journey. We know the path. Path's going to be volatile, and eventually volatility collapses, and things get calm. And then volatility spikes, And well, that's your topping process when shit starts to hit the fan. And we'll be eyes on and we'll be prepared, unlike we've ever been prepared for watching that topping process. Now, probably should go to comments to guide the direction of a conversation. Otherwise, it's just where were we? 2019, 2020, 2024. It's a completely different world. And therefore, we learn things every year, every cycle. So there's a very different process that I'm going to execute between now and the topping process in preparation for 26, 27, 28, about a 2.5, 3 year time span. And it's going to be a very different behavior of interacting with these financial markets over the next couple of years for me. Um, and I'm happy to talk about that because I always talk about that. But let's let some commentary guide some conversation from here. If there's not commentary, I will continue to ramble on as always. Critical mass in the house. I'm digging myself out from the depths of hell. Should we expect a nice run up until actual cut? We expect a nice run up irrespective of the cut. The cut doesn't mean anything. If anything, the cut is responsive to market conditions. So we expect a nice run up as long as the DXY continues to fall, which you could argue that the DXY is front running cuts, or people are starting to unwind their dollar longs, their leveraged dollar denominated positions, which involves the sale of the dollar for foreign currencies, which is obviously has ripple effects. So foreign currencies are strengthening. That has a strengthening, appreciation effect on foreign assets. And as foreign assets continue to appreciate and U.S. assets depreciate cyclically, you get a capital flow outside of the United States. It's the same reason you are changing from one asset to another. A lot of folks frantically in the crypto markets, the rotator, as we've historically called the behavior. And in this instance, from a global financial standpoint, that rotation is to foreign assets in other countries. And appreciation begets appreciation. As things go up in price, the trend of a population is to chase, is to FOMO, is to experience that exuberance. So if this is the start of a capital rotation of money from the U.S. to outside the U.S., there's some very obvious effects that has. It's the depreciation of overpriced assets in the U.S. and the rotation of capital from flows from overpriced to underpriced, and that creates also a domestic capital rotation process. I broadly expect overpriced tech assets to mean regress and the Dow Jones Industrial Average to appreciate, which is probably part of more of a secular trend of repatriation of supply chain. How about that? Cyclical and secular. Cyclical is more short term, 1, 2, 3, 4 years. Secular is a structural change in the system where capital over the next 20 years will generally go to different sectors of the economy. And that's my opinion. I think that just makes sense also from a political standpoint, which is just further confluence, saying it's a reasonable idea. Clearly doesn't mean that tech doesn't outperform, but what is tech? So maybe they readjust the, QQQ and the NASDAQ index to reflect a different part of tech, 'cause that's all it is an ETF, an index. Doesn't mean shit. And NVIDIA could continue to outperform, but the other shit, the companies that aren't going to be successful over the next 5, 10 years, they bleed out and they suffer, and the capital available to them for business operations dries up and rotates into other sectors that are in need of capital infusion and really deserve appreciation considering the change in the global financial landscape. So the capital rotation will not only just occur outside of the U.S., it also occurs domestically. The whole structure of the system is about to experience a cyclical change. And we're here to watch it in real time, watch the technical data that tells us where the capital is rotating to. Simple as that. Is it as simple as that? No, but fortunately, crypto markets, we know what they're going to do, and it's going to be an interesting cycle with a very different strategy in play. Very passive strategy. Very healthy and calm and relaxed strategy. No more of that insanity anymore, ladies and gentlemen. Arrow's in the house. Good morning. Critical mass. Arrow. I sold a bunch of BTC and ETH around 62K. Would like to get your thoughts on BTC TA and think we get another dump into the 50s. Um, okay, so let's look at Bitcoin on the 6 month chart. It's very hard for me to to answer that from a relatively short-term time frame because I just don't care. I honestly, it doesn't mean much. It's a 10K difference in Bitcoin. Eh, It's on top of 50 is a 20% difference in price. No, no, 10K on 60 is uh, is is less. It's a 15% difference in price. So honestly, don't kill yourself. It's too much work. And frankly, the structure of the setup is insane. This is an absolutely insane technical chart. I don't think anyone's ever seen a technical chart like this. We're talking about previous all-time highs back in 2021, and then a breakout in March of 2024, and we have been holding as previous resistance flip support for 1, 2, 3, 4, 5, going on 6 months. 6 months of a retest of resistance flip support. That is insane. That is structurally insane. No one's ever seen anything like that before. There's nothing like that. That there's nothing. So 50, considering the strength, I mean, shit would have to break to get us below like a monthly 10. And we're talking like 57, which is a drop in the bucket from where we are at current prices, 57. And to get to 50 would be no, I don't see that as probabilistically reasonable. Um, uh, Things can, and that's the point of the path conversation. Dollar depreciation causes unwinding of dollar leverage, which causes depreciation in assets as capital flows out of the U.S. and to different market sectors domestically, so things can blow up, and that's the volatility. But as long as move keeps dropping directionally and continues in this direction, I generally expect the volatility to be relatively low. I think the regulators have done insane things with regard to volatility suppression from an equity standpoint, maybe purchasing SFIX, from a bond market volatility standpoint. Was it the Depository Trust Clearing Corporation, DTCC, centralized clearing of treasuries? It's literally, by definition, suppression of debt volatility. Uh, it, yeah, something will break in the future, but literally they're just standing up these insane volatility suppression platforms. So at least you get a cycle of them having a pretty much unprecedented volatility suppression capacity. So I don't expect 50. That doesn't make any sense. Anywho, in my opinion, and according to my behavior in the current market conditions, there's nothing to do. And and I would encourage that for most people, especially veterans that listen to me. Obviously, if you're looking for positions in the current market environment, it's relatively late. Yeah, there's discounts. A lot of the VE33 NFTs are significantly more discounted than at compared to prices that we acquired. And this tells us something not about you know struggling to acquire capital to get more of a position. This tells us more about behavior in the coming years and how we need to approach when and at what valuations we acquire prices, considering our macroeconomic indicators. We could have waited. Era, we probably could have waited much more. Um, we should have, but that's irrelevant. What matters is what we own and the productive capacity heading into what is always destined to be a euphoric market, an absolutely insane, degenerate euphoric market. So that comes back to what I said earlier about what is my planned behavior in that euphoric market. And if I could get through comments, I will get to that description. Morning Cap, TCA man, much pleasure. Raul, Gazika. You often talk about getting the size you want. What are you referring to here? A% of the protocol. Well, that's very nice. If you could get 1% of supply of a protocol, it gives you a very strong position. That's very meaningful. It's not so easy. Usually requires a significant amount of capital or just insane timing, early entry, or not even seed round. I mean, 1% of a $20 million seed round. All right, fine. Maybe you could get that 100 grand. That's not that bad. Well, 200 grand. But that's still, it's 200 grand in a $20 million seed round. That's 200 grand. It's a lot of money. So that's complicated. But also percent of your portfolio and available capital, which is basically saying your portfolio. So relative to the size of other positions, is your portfolio balanced? You're looking at it as a craft, as like a sculptor, an artist. Like, how does your portfolio feel? Does it feel balanced? Do you have enough size of this, or is it like literally, if you got a Bitcoin and you have 10K, like four 10K positions, and you have like $500? What's the point of throwing $500 into a new protocol? That is not an appropriate size. You have a Bitcoin and you have four 10K protocol positions as exposure. Why are you going to attain a position at $500? So that is not an effectively sized position. There's not available enough. There's not adequate capital available to acquire an effectively sized position. I hope that helps. Lake Meadows, peace. I hope, is that leaving or is it just peace to everyone? Because sure as hell I want peace to everyone. I think that is very important and is sorely absent in our global society. Snoke, I need my rational dose. Well, that's what we're here for, to keep it rational, ladies and gentlemen. Lots of talk on Crypto Tutor about curve metrics. I'd love to get your thoughts. This is a perfect day to realize pre-euphoric conditions. And unless you've experienced 2016 and post March 2020, that was weird. March 2020, it was literally they shut down told people to not work. That was literally like an event. Um, Things change quick, really quick. How quick? All you need is one person, one whale, one fund to make a large enough purchase, and it just starts a cascade, and that cascade happens quick. You get a 20% rise, and so what's the market cap on Curve? Get something like there you go, 384. You get some whale throws in $38.4 million. You know what that does to price? Oh my God. So someone throws in $3.4 million. I mean, RSR just threw in $2.2 million. This is also constructive in that we should have waited for before deploying certain amounts of capital. Now, obviously, anyone that acquired Curve at 20 cents, that was very structural bottom. That was a big liquidation cascade. That was the final liquidation of Mitch. How do you get lower from here, considering the expression of support and the expression of macroeconomic indicators telling us we're about to enter the global currency expansion cycle? I don't see lower highs or structural weakness being expressed in market activity and price action. So in this regard, this plays much more into my thoughts on behaviors in like 2027, 2028, and start waiting. It's what to do with capital and when to do something with capital. We know what to do. We know how to identify effective investments, and we know how to identify effective sizing of investments. It's just the when. And I think we will be significantly better prepared towards the end of the decade. And that's very meaningful to me. And that plays into what I can describe of my behavior going into the current cycle. Snoke, thanks as always, Captain. Wait, did I overwhelmingly answer that? Yeah, I'll give you my opinion on current metrics. $1.897 billion deposited. And then if you go over to CRVUSD and Lens, it's $2 billion. $2 billion startup that survived and is mispriced. And folks could argue there's better, but better is irrelevant. What's pertinent is capital availability and what works. So velodrome's better, aerodrome's better. Who cares? You have exposure to them too. Can't you can't go all in. You need some diversification, which we have. And that's literally the conversation we've had over the last year, which has caused us to take various positions in the V3 protocols. But that has nothing to do with the existential expression or the expression of survivability, the existentiality of the protocol has been tested countless times. And that's crazy. It's gonna go through the global currency expansion cycle. So the data looks great. I'm absolutely on the floor. My jaw's on the floor with the data I see, and obviously that data is aerodrome activity and velodrome being on top of Uniswap and what Arbitrum's doing. Oh my God! Is it Sony coming out with an Optimism superchain? Oh my God! The potential for this space is hard to put into sentences because even the tech boom, that was just mostly domestic. I would say mostly U.S. equities. This is a space, a market of markets, global. There's nothing like this as has ever existed. I'm not talking about a particular protocol. I'm literally talking about the crypto space. A market of markets filled with businesses that provide financial products and services globally. I could be grossly underestimating the expectations that I've mentioned to you privately, Arrow. I could be grossly underestimating them. But as we discussed, I set very reasonable expectations, very low expectations, which makes those numbers quite still extraordinary that we've discussed. It gets weird when the currency expands. And I recall us talking. You mentioned not going through Q4 2019, Q1 2020. That maybe like mid 2020, 2021 was a lot of folks' entry into these types of markets, and it was absolutely insane behavior in 2020. And the flip once you flip, if you didn't experience that flip, folks, between 2019 and 2020, it's just a really weird experience. And then when you couple that experience that I vividly recall between 2019 and 2020, and clearly like 2015 to 2016, you couple that with the type of market that it was, the structure of the market in 16 and 17, and the structure of the market in 20 and 21. There's nothing like what exists right now. This is an investable landscape of globally accessible fintech business dealing with foreign exchange, credit, and derivatives. This is nothing like 2020 and 21. Nothing. And none of this existed prior to 2020. Zero. Zero existed prior to 2020. Zero. But now these are investable. I mean, I've seen them as investable the whole time. But the difference is we live in a bubble. We're a bubble. Our understanding and capacity to inspect these protocols and understand them for what they are, this is the bubble. This is not a minority. Our conversation is not a minority. Our conversation is non-existent at large. This is not a topic of conversation that anyone else discusses. It's obviously like um, the big funds like Dan Morehead and whatnot. They understand this to a degree, but even like a Dan Tapiero who focuses on like crypto equities, or even Raul who talks about Solana. Yeah, Solana's a big deal, and he structures his portfolio accordingly. But none of them talk about this as fintech enterprise, foreign exchange, credit, and derivatives as investable enterprise, investable business. No one does. So the scale and the scope of these businesses are potentially extraordinary as compared to the expectations that I've discussed. I always say you have to meet your expectations, meaning when you meet your expectations, you're satisfied. If you don't meet your expectations, you're disappointed. So set your damn expectations really, really low. And that means you're always right. If you exceed your expectations, you're euphoric. If you meet your expectations, you're satisfied. And that's a great way to engage with markets. That's a different way to engage with markets. That's a sustainable way to engage with markets. Anyway, I hope that helps, guys. Thanks as always, Captain. Sir Joe present. Good morning, Captain. The Captain. Captain, 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 Captain. Hannah's in the house. How are you? Grateful to be here with you all. Yes, indeedy, on this fine Friday where we talk different about things that everyone sees, but no one talks about it quite like this. Got to be a little different in this world to really understand how the system works. Very much, very much. Very much looking forward to any level of expectations beyond where we are current in terms of weekly revenue. Dude, the future is up. Uh, who was here? I'll do the inspection myself. Stablecoins. It's all about stablecoins because it's all about dollars. It's all about capital expansion. It's all about currency supply. Everything is all about currency supply. So we go over to stablecoins. Remember DeFi Pulse? The original DeFi data aggregator and how horrible it was? I mean, all right, fine. They were the first. DeFi Llama came along. They dominated. This data is insane. So guess what? Between April of 24 and today, it's been flat in the expansion of liquidity in the space, currency supply in the space. And notice where we bottomed. Bottomed, I don't know, between August and September, October of 23. Oh, go figure. That sounds familiar. That's where it bottomed. That's where all this depreciation from 22 bottomed. And then it started to expand. And we had a big run, big meme coin frenzy, big repricing from the downside of a lot of assets, mostly non-DeFi centric because it's not an understood sector. But guess what? Now that everyone got blown out of their meme coin exuberance, now everyone's like, oh, maybe I should take this more seriously and think about what is proper investment characteristics. So we had a nice expansion from the bottom to here. And we're currently sitting just slightly above 159 to 166. $10 billion. 168. So it's 10 bill. 10 bill expansion for basically 2 quarters so far, going on 3 in 2024, which is stagnation. So when the currency supply expands, that's when you get your appreciation. What happens when this is a half a trill? And you get because you can't go back to 2021. You can't look at this currency supply expansion in current 2021 and be like, oh, this is probably what we're going to see because what occurred in the past occurs in the future. The market wasn't as solidified as it is today. The market back then was completely exploratory. It's all speculation and just frenzy. No one had any history. No one had any precedents to go on to understand what may play out. And now we have at least one cycle of history, one currency expansion cycle of history to draw on, to speculate on where things play out. So my expectation is history rhymes. We get an expansion. We have no idea what this currency expansion cycle is going to look like in crypto stablecoin terms. Now that there's an actual investment landscape to look at, everything that could explode and die exploded and died. What survived, it's akin to, um, you know, it's akin to a collapse. It is a collapse, which reveals the investments, opportunistic investments, the businesses that are actually meaningful, and they survive because they're meaningful. That's meaningful. That's a big deal. So folks are like, the Dino coins will not perform. Yeah, the Dino shit from 2016 and 17, the ICO, the Alt L1s, the Tezos. There was a big frenzy with Tezos back in 20 and 21 with NFTs. But where's the DeFi? Where's the businesses? Now, clearly, they could be meat-based businesses. That's like the argument with Chainlink and XRP. But MeatSpace is slow AF, and on chain you could inspect the businesses in real time. Credit, all right, credit. How much credit's out there? You go to Curve USD, there's your credit, and there's credit on Abracadabra, there's credit on Aave. You can see the amount of currency that is being created by these business products and services, and it's quite extraordinary compared to the market cycle start in 2020, because there was nothing in 2020. And now we're starting a cycle with, I can't even inspect. How do I, is there analytics? It's got to be an analytics page. Manage analytics? No, that's not. How much is deposited on Aave? I don't want the app. $21 billion. $21 billion. Ladies and gentlemen of the crypto space, there's $21 billion in Aave. In 2019, Aave was called Lend, and it had nothing. This is a startup that started in 2020, had a hell of an exuberant cycle in 20 and 21, and now has $21 billion of deposits. And that's insane. I don't even have words. I don't even have a capacity to frame in language how weird things can get. Now, that's clearly conflicting with my expectations, because you have to have diminished, lowered expectations. Cue Saturday Night Live, lowered expectations. You got to have lowered expectations, because then you're going to meet your expectations, and then you're happy when you surpass your expectations. This is absolutely insane. And they also have a credit product, their Go product, but they don't have full stack incentive system, liquidity incentive system. They don't have the foreign exchange infrastructure. That's a Curve product. And on mainnet, you got Uniswap and Curve, and that's it. You got some other stuff. It's going to be very interesting to see what the other stuff does. Dodo I've been looking at, and that's interesting. But we'll see what comes with the V33s solidly on mainnet, but that's solidly is actually cross-chain, different approach to the kingdom, a different approach to Velodrome. It is cross-chain deploy, and it's one-off on base aerodrome. But these are businesses. And these businesses are going to receive a lot of interest and a lot of economic flows of people speculating on what they're capable of with regard to the financial products and services that they offer. When? When will that occur? When this shit starts to expand. When this shit expands and we're at 200, 300, 400 billion dollars, people are like, what do you do with the money? Oh, let's try a cash and carry trade. Oh, let's buy some collateral and borrow against it to obtain some leverage. Oh, man. It could get really, really weird. All right, so it is about 12:10, about 40 minutes in. Let's, now that the comments are good, if you're on YouTube or X, you post some comments. More than happy to discuss anything. But I'll give you my rundown. Try and keep the stream a little bit short today, but I'll give you my rundown on what I'm doing. I'm doing nothing because we've done something over the last 2.5 years, and we've invested. We've purchased businesses, and now it's time to see what those investments do. And I am satisfied with the choices I made, the businesses that I own, and the exposure that I have to these markets. They're owned, they're not positions. So these are part of a portfolio. These are subsidiaries of my business entity, and I will treat them as such with respect. We've learned a lot of things. I've learned a lot of things in doing what I did over the last year. Over the last year, especially in timing with regard to investments. And maybe I was a little bit negligent of macroeconomic data in hindsight. So the whole point of the process is not to attempt to adjust or correct. You're supposed to prepare for different behaviors of the future and do better in the future. So my entire position right now, behavioral position, is to do nothing and collect cash. So uh, everything is just going to accumulate, 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 accumulate. When the market tops, which we will be clearly discussing because I'm fascinated by the macroeconomic data, it's going to be cash. It's all going to be cash. So when everything starts to depreciate, it's all cash. That's it. I don't know about collateral. The collateral accumulation mode is done for me as well. It's all cash. It's all stablecoins from here until literally the market top. Bitcoin is going to be at whatever it is, 100,000, 150,000, 200,000, 250,000. Ethereum is going to be at 7,500, 10,000. It doesn't matter. Cash. Because one, peace of mind. I'm in cash. I don't care when the market tops. I don't have to time the market. And two, that means I'm sitting on a stack of cash, and now I have buying power when after the market collapses. So I've never done that. Sure as hell didn't do that in 2021. Sure as hell didn't do that in 2017. I am going to do that in 2024 and 2025. That is my approach to this entire cycle. And then market tops, things start to completely collapse, sitting on a pile of cash. I'm going to stare my ass off the macro indicators, watch the dollar, watch the move indicator, watch the bond market, watch equities, VIX, SVIX, whatnot. And I'm going to find discounts. I'm going to find cheap prices in what I expect new businesses that come online in the next couple of years. And they're going to be cheap because the market's going to be distressed. Notice we've had 500 people on the stream at times. It's 163 people. Now, I appreciate all of you, of course, but you are few. You are very few that think differently and see a market and don't see just something that is temporary or transitory. This is a market to dominate, a market to own, a market to engage with. There's no leaving the market. This is a real market. So the point there is the social media is, my opinion, is dead from what I recall vividly in 20 and 21. It was a frenzy of social media activity. My posts get little to no attention. There's no, oh, what do you think of this? Oh, what are you buying now? Oh, well, where's the top? What's the price action? In 20 and 21, it was just 50 replies with where things are heading, and everyone's looking for pricing. And I don't know what folks are looking for, but that's not the point. The point is the social media environment was on fire. And that is a great indicator for me, given decent exposure, 19,700 on X, of where we are in the cycle. Because when the market starts moving, history tells us there's no one, like 98% of people are not prepared. They have no positions. They're not ready at all. Because when these markets move, and not just crypto, any market, people only react when the price goes up. And that's what I've spent the last 2 years defining, a different behavior, a very structured and rigorous behavior that has nothing to do with that. Nothing to do with, oh my God, it's going up. When's it going to go? I don't care. You want to own. Own when? Cheapest price possible. That's why we talked about Buffett methodology. That's it. Buy when it's cheap. I don't care what's going up. I don't think I don't think there's going to be technical trades by me this cycle. Obviously, 2021 did a variety of technical trades we talked about. I don't think so. I think I'm going to. So when I do things, I tend to be an extremist. Right now, I've been keto for the last like month and a half, going on 2 months, and that is, I'm an extremist in that regard. It's like 10 carbs a day, 15 carbs a day. So I definitely have a capacity to be completely extremist with regard to my behavior heading into this cycle. Cash, 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 and then Arrow will get to will get the opportunity to watch when Move explodes and it's finally starting to bottom. The dollar tops and it's finally starting to bottom, just like we are looking at right now. It's like we're looking at right now. It topped and now it's starting to push lower lows. Can you imagine? DXY goes to 130 next cycle. We'll find the downtrend. We'll find the confluence where the dollar's going down, the move's going down, and the long end is finally starting to appreciate repeatedly. And we'll get the cheapest prices possible. You need the stack of cash to do it. This is what Buffett does so well. Do you see how much cash Buffett's sitting on right now? You know what he's going to buy? That cash isn't going to sit there. He's waiting for the cheapest price possible. For productive businesses that have solvent balance sheets and characteristics of survivability. They have a product in demand and they're mispriced, maybe distressed, maybe bankrupt. He comes in, swoops it up for pennies on the dollar, sitting on a pile of cash. I intend to deploy the exact same methodology, the Buffett methodology. Simple as that. Hope that helps. 21 billion on a globally accessible, decentralized, immutable B2C credit market. So also business to business, directly accessible, no counterparties. It's I don't have words. We so what my point there is, insane is a simplification. That is probably the best way to state it. It's unimaginable. There's no precedent for words to describe what that is. Because these are Eurodollar banks, and Aave is a Eurodollar bank, as well as a money market, a credit market, whatever the hell you want to call it. Point is, collateral borrow as well as print liabilities. Oh my God. Oh my God, what kind of business that is. It's extraordinary. The captain. Agreed, sir. Social is current dead. 8 people in a space the other night that used to average 450. It's dead. It's dead. So it's part of a suite of indicators because when the market rips, bottom hits, and that one whale smashes a $30 million buy on curve, and it doubles in price in a wick, and then everyone's scrambling. Oh my God, why is it up? Because someone who has capital, who has $1 billion in net worth, smashed a bid on 30 mil. That's why. Because someone is putting their vote of confidence into an investment, buying something that is discounted. But fortunately, that happens to not just one investment, that happens to all of them. Because when the supply of currency expands, and there's so much excess capital, it needs to be deployed. And it causes nominal asset price inflation. And that's what we're here for. Hannah, what if you weren't investing in the past 2 years? What would you do today in that case? So, investing is not like Bitcoin and Ethereum and Solana. So, there's also nomenclature. There's also the way I describe things in my own terms. I don't define Bitcoin, Ethereum, Solana, or tokens, spot tokens, where you're just holding a token. I don't define those as investments. What does that mean? I define them as cash because you could sell them. You could use them as collateral to borrow against them. So it's part of the cash position. So you have your those types of assets. Clearly, they're volatile, but they're cash equivalents because you could sell them instantly and get dollars. Stable coins. So cash is those types of allocations and stable coins. So investments require capital, um, a fair amount of capital, and also a fair amount of psychological reprogramming to be able to sit on them and own them and not think of them as something that you got to buy now and figure out when to sell them. So a first cycler is probably not investing at all. A first cycler has a greater degree of speculative requirement because you need a capital base. You can't be an investor without a capital base. So what does that mean? You need a fair amount of capital base. Strong amount of capital to be able to own things, to buy things, to own. So it's not trading. Most people, the majority of people, the vast majority of people lose their money trading. So what is a relatively hands-off way to acquire capital? So obviously trading time for money sucks, but at some point that's your capital base. So fastest horse type methodology, in that regard, clearly Solana's off its lows of $8. I mean, so unfortunately, I think we're late to that part of the cycle. Like max opportunity, what does that mean? I don't even think I have Solana as a ticker anymore. Let's look at Bitcoin. So the low in Bitcoin was 16,000. So opportunistically, from a I want to make money standpoint, not investing, but with regard to appreciation, asset price inflation, uh, optimally, the purchase is made when things are collapsing. It's like 22 was insane. So when the bubble bursts, like some great macro folks, and we all basically agree, it's going to on a version of the yield curve, you get your massive recession, and something breaks significantly, and that causes forced selling. Um, so I guess the question there is with regard to like a Bitcoin purchase, um, is where's bottom? And in my mind, truthfully, is bottom above or below current prices? So that does require a sale, for instance. Uh, if you buy at current prices and you get the 150, let's say, and then it collapses to 60, which is literally what it did last cycle. Let me zoom out. Sorry. Notice last cycle high was on the monthly chart was 19, and we collapsed to 15. So we went a little bit marginally lower than last cycle. So run up to 150, collapse marginally lower to this cycle around this price. Obviously, it gets more complicated because this time is different. Higher lows and interest rates, the structural invalidation of bond appreciation, repatriation of supply chain, and the need to devalue the dollar in order to do that. So the cycle is different. So it's not necessarily the case that you get such a retrace, such a depreciation leg in the cycle this time. So, trading is no guarantees to increase the capital base, but holding um, cash that experiences asset price inflation, like a Bitcoin, Ethereum, Solana, you get your multiples. So it, money makes money. Smaller amounts of money make less money. Larger amounts of money make more money. If you have $1,000 invested and you get a 100% run up in appreciation, it turns into $2,000. If you have $100,000 invested, 100% increase in valuation produces $100,000 of profit. So produces the chicken and the egg scenario, where it's very, very hard to produce that first $100,000. This is what good old Charlie Munger, said as well. You do whatever you can in order to get to that first $100,000, and that doesn't necessarily mean gambling and taking risks to the point where you lose everything. It means things that I've discussed, and my wife has told me just stop discussing things like that, like cutting costs and like literally potentially what would be considered insane things that the general public would be like, what the fuck is this guy talking about? Like, well, so I have been strongly encouraged by my boss to not discuss such topics. But capital base is everything, and I would argue um, it's imperative to really have time of experience before investing, because how do you sit through a cycle and and understand these DeFi protocols without having like 2, 3, 4 years using them? So in order to understand what is an investment, you really have to have used existing products so you can identify future investments. Everything I talk about comes off all these years of experience, so it's very hard to tell the story for someone getting in. So I would probably say think from a cash perspective. Don't think of Bitcoin, Ethereum, Solana, what have you. I'm a fan of Atom. I'm a fan of a variety of different things. But don't think of it as investments. Think of them as a cash equivalent, and they will nominally inflate in price. So if you're able to double or triple your money on Bitcoin this cycle, or Ethereum, you get a 3, 4, 5x. I mean, Solana's already up 15x. 100 grand in Solana at the bottom is worth $1.5 million currently. And that's today. That's not even what the cycle is going to do. It's literally just the retracement bottom. That's the hard thing about Bitcoin and the cash equivalent assets. They're already repriced back to the mean. They bought the investment time, not investment, the allocation time to these types of assets is 2022, which is very constructive to us looking forward to 26 and 27. Of when to adjust your cash portfolio from stablecoins to collateral assets. So investments I don't align with the repricing of the collateral assets, as we can tell from our most previous experience between 22 and 24. So the cash position gets reallocated to the collateral assets from stablecoins, but you're not investing. And then following the macro indicators looking for a currency expansion cycle, that's when you could start buying investments heading into the next cycle. I'm literally already thinking about the next cycle much more so nowadays than the current cycle which we're about to experience, because I've already solidified my behavior in this coming cycle, which is literally right on our doorstep, expressed and confirmed by rate cuts. So what would I say? I would personally wait until next cycle. What does waiting mean? I think Bitcoin's at a premium, I mean, doesn't this chart indicate it's at a premium? It significantly diverged from the time-weighted average price, 47,000, 48,000. Significantly diverged from the 200 moving average, 36,000. Dare we go out to the 6 month? I don't think these are applicable. And then again, we did get the crash to the time-weighted average price on the 6 month in 2022. So from a 6 month time frame perspective, we are so at a premium. This is such a bubble price. So time frames they very much matter to understand how much to what mean things can revert to. I state, based on looking at this chart, a Bitcoin price anywhere above 28,000 is bullish. If it mean regresses to 28,000, that's a hell of a chart because it's currently at a bubbled price according to the average price of trend growth. I hope that helps. I don't have a capacity to state procedures other than my own, processes other than my own. I guess everyone charts their own journey. Everyone will have their own story to tell of how they got from A to Z. So therefore, what I would encourage is for folks to define reasonable expectations so they're not disappointed, have sustainable procedures so you can execute repeatedly and not be like, oh, I'm going to try this. What am I going to do? You don't want to be uncertain. You want to be confident and consistent. And from what I would encourage in that regard is to write things down. Write down procedures. Use obviously digital paper nowadays, and my procedures are clearly all written down. So everything I discuss, everything is encapsulated in this 48-page document at this point. It's a rigorous documentation of procedures, and it's at 48 pages. This defines my business at this point. So pen and paper, or digital pen and paper, so to speak. I hope that helps, Hannah. And what I would say is, in the coming years, we all get to compare our story, and we all get to make adjustments. So the most important thing is to execute with prudence, diligence, and survive, because that's all it takes. That's exactly why Buffett says the general public should invest in low-cost index funds, because it goes up. It just goes up. If it doesn't go up, then Immortan Joe is our next president. Or Idiocracy. What a great movie. Everything collapses into chaos and anarchy. So the number goes up nominally. Asset price inflation will occur. Hope that helps. Yeah, I ask that question all the time as well, because obviously I'm not saying, I don't get on the stream and say, oh my God, Bitcoin's going to $250,000. What's your top speculation? I don't give a crap about top prices. What's my target price? No, I have a much more robust and rigorous methodology, structured capital management. So I think it's obviously intimidating. I accept that. I understand that. I wouldn't be surprised if that's what most people think. But in the end, my wife always says, know your audience, but I'm not here to have the biggest audience. I tell everyone why I'm here. I'm here. This is my journal, and by telling and answering everyone's questions and telling these stories over the last years, I have been able to refine my business into what it is to create such a document that I just showed you guys, and that I'm forever grateful for all you folks listening to me. In that regard, I would have never been able to do what I've done without all of you. So thank you. Gazika, do you have any interest in the rest of the flywheel protocol? Yes, FXN. And how do you feel about regarding FXS lately? Disappointing, best is yet to come. Price is irrelevant. So what does that mean? How do we inspect those two without price? FXN, F of X, F of N, F of X is a hell of a team. The Aladdin DAO is a hell of a team. And they're very interesting investments. I think they're investment grade, and I have my reasons why I don't hold the size that other people do. But that reason is very simple. I don't need to. I already have exposure to FXN, and I don't need to own it. Curve ecosystem. It is that literally, Aladdin DAO is the Curve ecosystem. It's part of it, therefore it is it. So I'm just a base layer maxi, and I don't care about outperforming. If one protocol, one asset inflates 100x and another asset inflates 50x, I don't care that one inflated more than the other. What I care about is following my procedures. And I care about owning the base layer because that is the most survivable component of the ecosystem. So I don't need to own them to have exposure to them. And also appreciate what they do from a business perspective and what they contribute to the ecosystem, which is a big thing. How do you feel regarding FXS? So Frax, nothing has changed regarding anything I could say. It is one of the most extraordinary businesses I have ever seen. It is by definition a central bank on chain, cross chain. It's a central bank in an emerging market of emerging markets. It is one of the most profound technological constructions I have ever seen. And it is mispriced. The best, so what do I say to that? The best technology is not necessarily the best investment. What is mispriced does not necessarily become correctly priced. Maybe it does, but that's the speculative component of investing. So, surely disappointing, but it's not the protocol that's disappointing. It's just the lack of rational capacity of the larger investment space. Investors have no idea what is something extraordinary and what is not. They just give a shit about what is going up in price with green dildos and whatnot, as social media says. So nothing changes regarding what I state and what my opinion is of Frax. It is extraordinary. Price action, disappointing, and speculatively, the best is yet to come. Hope that's granular, because I'm very careful with how my semantics. Do you think Mantle will make it survive? Shit. I don't know if the global economy is going to blow up. I tell you guys all the time that the whole system is literally designed to collapse. And Immortan Joe will be our next president. There's nothing that's certain. Folks used to say there's nothing certain but death and taxes, but I've kind of redefined that of late. There's nothing certain. You guys know what I'm talking about. Um, I have no idea. I would like to think so. So, we have some nice exposure there. I don't know if you dropped that exposure, but I clearly retained that exposure. So I would hope so. It's fairly it's productive. I mean, I'm not thrilled with it considering I deployed a larger position to Cleopatra as compared to Arbitrum, okay, as compared to Ramses. So these were equal deployments. No, I'm sorry. Nile was larger than Ramses and Cleopatra was larger than Nile. I think it was like a 20 chip applied to Nile, and we deployed. I mean, we were literally deploying together when we did this. It's like a 25 chip applied to Cleopatra. So look at the revenue for all three. 480 on Ramses, 192 on Nile, and 179 on Cleopatra. Clearly, the Ramses. This was and this was the cheapest of the three. This was an 18K deploy. So this has, but then again, what is a speculative investment? So what is Nile? What is Mantle? Those are meaningful. And what is currently inaccurately priced may not be that in the future. So in hindsight, you could say to yourself, it would have been better if the captain deployed his Nile and Cleopatra and just dumped it all into Ramses. Yes, maybe in 5 years' time. Who knows what Linnea, what comes of Linnea, and what comes of Mantle? No way to know. But that's the whole point of optimizing the amount of capital you have to buy things as cheap as possible. So I wish I bought at these prices, the depreciated prices, the cheapest price possible. And by golly, I'm going to do that next time better than I've ever done it before, and I'm going to do it flawlessly. Like an extremist of keto and fasting, I could do it. I could do it. I'm going to be so dry and cold with capital management this cycle. It's going to be refreshing to me because I was literally exuberant in 20 and 21. But I evolve and grow rapidly, and I have a capacity to engage with this next cycle in a way nothing compared to the last cycle. It'll be like just, psh, who is this guy? I remember staying up all night long. It was just insane what we experienced in 20 and 21, and it wasn't healthy. And I won't do that again to myself. I'm formally, literally, formally prepared this time. Tapsy, hey, hey. Hannah, it helps. I'm grateful that it helps. So obviously I say I do this literally for me, but I am always grateful if I help at least one person do better. Because what's the point of life unless you're contributing and doing for some reason beyond yourself? So I, I, I will be very happy to hear uh, everyone's journey and how much better people did because they did things a little bit differently. Dare to be different. That's what matters in life. Would you share your document by any chance? That's all on Discord. We have a whole channel on Discord where we talk about it, my friend. Premium Discord, $10 a week. Premium content, as much as it is quiet. It was pretty much a fever in the captain's Discord in 20 and 21. It was crazy in there. It's quiet now, but all the content is there from all these years, and there's still the survivors, a very well seasoned, like 200 Spartans of finance that have survived. And in that regard, it's filled with great capacity to answer questions and discuss ideas, thoughts, logic, reason. That's the deal, my friend. Iden's in the house. Good morning. Lake, on a scale of 1 to 10, when it comes to crypto competence, I'm at a level 3. It's taken me over 3.5 years. The knowledge base needed to properly navigate is extensive. Learning complex tech and finance. Absolutely. Understood. Appreciated. Um, this is your journey. And I am not OCD where it's like tap 3 times. But what happens with me is I get obsessive. So I'm not compulsive, but then again, maybe I am. Look at the damn document I made. That's 2 years worth of work of just insane writing. Um, maybe I am OCD, um, but maybe it's not a disorder because I put it down. I go to sleep. I'm certainly obsessive. So Be obsessive about the right things and no limits where you're obsessive and that you're able to put it down because you need to sleep well, you need to eat well, you need to be healthy. That's what's the point of all this if we're not healthy. So the best thing I could respond is keep going because we only have one shot at doing things a little bit better. So it's worth everything. But never sacrifice, meaning relationship, your wife or husband. No, you need to pull away from your obsessions and everything needs to be well balanced. I'm very like Zen shit. I like Qigong and all that ancient TCM. I love that shit. Work-life balance, mental stability, low anxiety. I love that shit. Just saying. Hope that helps. Arrow. Nah, I dropped Cleo a while ago, but it's at 325K market caps, which is crazy. All of it's insane. All of these valuations are insane. 325K market cap. Well, what's up when it's, 50 mil? Oh my God. But that's what these markets will do. They will reprice to prices that are insane. That's what crypto does. So, but we know that because we've seen that. We've experienced that. So, but I mean, I guess, but that's a cash. For instance, you're not capitalizing on that 100x as an investment. So this comes back to like Hannah's topic. You can't invest in those things because you can't deposit and own a business and receive cash flow and be passive. You are temporarily holding it to capitalize on capital concentration, the capacity of these markets to concentrate capital from the many to the few, the people that buy late to the people that buy early, because that's what trading is. So in that regard, uh, that's what crypto does. It reprices things an insane percentage. It's just gonna get weird. It just man, what else am I supposed to say? I've seen 16, 17, 20, 21. It just gets so, and then I feel bad because why does it get weird? Why does it get degenerate? Why is the behavior occur? It's a philosophical conversation and also a political conversation and a societal conversation. It gets weird because of desperation. And it gets weird because of uh, incompetence with regard to economic capital management capacity. And that causes irrational behavior. The buying at the complete wrong time, the buying at the tops and the selling at the bottom. The frenzy, the emotional overload of not knowing what to do, when to do it. It's not a rigorous exercise for the majority. It's an exercise of FOMO. And that was one of our oldest memes. No more FOMO. No more FOMO. So we've cured that. We've cured that and realized that that emotion is irrelevant. And it doesn't mean buy. That means buy at the right time, which means you have to understand when to buy at the right conditions. And that, my friend, we all know is a complicated story that we've been trying to tell coherently for the last 2 years. I mean, I'm sorry, it's even more. We started the stream in 2020, late 2020. So it's going on 4 years. Excuse me, telling this story. Good times, twin deployments indeed. It's gonna be weird, my friend. Hannah, I've been trying to get on Discord, but I can't get in for some reason. I have the links here, profile. So I'll pop it here. So I'm sorry, I just gave you my X, but here's the captain's Discord. Here's the launch pass link to it. Yeah, folks that are interested in Discord, we talk about everything. I know, I know the sentiment is, folks look for alpha. They look for being told what to do, and we have so much content on our Discord. It's not all my content. The vast majority of it's not my content. It's what other people have written, what other people have done. And you know, it's not do this, buy this, signals, those pump and dump telegram signal chats. It's just what everyone talks about, same shit over and over again, a community. But this is a bit of a different community. It's a rational community. It's a community of people that think critically and make thought out decisions. And clearly, it's intimidating. It's broadly intimidating to have such conversation. And I can appreciate that. But my wife says to make modifications and do things differently, and I'm just like, no. It's who I am. It's what I do, and it's not about being consistent. It's just I don't know how to think a different way. I don't want to. I want to tell the stories I tell, and I want the topics of conversation and the tone on Discord to be what it is, because I think it's meaningful. We're sorely lacking rationality in this world, and everyone is so tribal. There we get into geopolitics and the conflicts around the world. It's just uh, the tribalism is horrible, and that's what rationality. That's a good big reason I like to talk about rationality because that's all irrelevant in terms of rationality. Rationality is the common denominator. That's when anyone can talk to anyone. That's what matters. That's what brings the world together. That's what allows people to coexist is it's talking. And the emotions are irrelevant. You talk to produce productive, logical, reasonable outcomes. That's what would change the world. Hope that helps, ladies and gentlemen. Max Profit, I think I'm late. Ladies and gentlemen, we're ending the stream. Yes, we are, by the way. So, yes, you are late. You've joined at the end of the stream, my friend. But I thank you for joining. No less, 186 human beings across the planet called Earth have decided to join us for the most rational conversation in the crypto space today. I appreciate each and every one of you because together we could do a little bit better. It is Friday, August 23rd at 12:52 p.m. I wish everyone a wonderful weekend. Enjoy sun. Eat a little healthier, be a little bit calmer, be a little bit more rational, and uh, and we'll make it through the weekend so we can have this conversation again next week. I wish you all a good one. Catch you then. Peace.